right now. Right now, 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 right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been getting bigger.
Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the longer-term technical indicators that talk about a rally coming to Bitcoin over the next month or so. I do believe that there are several technical indicators out on the daily and on the longer-term time frames that are very relevant right now to you, and also very relevant to where Bitcoin is going to be heading over the next couple of months. I think that Bitcoin is going to be able to break above $31,000 aggressively within the next 2 months, and we're going to outline today in Coffee and Crypto Live why I believe that those technical indicators tell the story of a rally coming to Bitcoin sooner than you might think. I hope you guys are looking forward to #FinSoft Friday. Let's go ahead and read some chat. Crypto Mini Bike is in chat, said morning everyone. Mike Lowry is in chat, said good morning. Queen is in chat. BTC Crypto Alerts in chat. Dan Nolan, Philly Skills 1428, Thomas Post, Anthony Sudano said, what's up, crypto family? What is up, my friend? Mr. Check 1984 said, hey, Jeb, every day. Hello. Sean Averill said, let's go. Happy Friday. CBD Study in chat said, good morning, Jeb. Good morning, Queen. Freedom Advocate said, wow, longest ad ever. I'm not sure what would have been shown to you. It didn't change anything. But yeah, sometimes, you know, it's funny. One time when I was watching YouTube when I was in middle school, I ended up getting like a 58-minute long ad about razors, and it was unskippable. I just refreshed the page. If you ever have that happen, there you go. DHN Crypto said, it got a real good feeling this stream will be awesome. I have a real good feeling it will also. Freedom Advocate said, this is an area I hold on to for a loss when the market dumped such an important area. All right. Let's go ahead and jump straight on over to CoinMarketCap. Really appreciate all of you for tuning in. Right now, Bitcoin is trading at $29,487. It is up a quarter of a percent over the last hour, down a quarter of a percent over the last 24 hours. Not a lot of trading taking place over the last 24 hours on Bitcoin. Truthfully, not a lot of trading taking place so far in the month of August, but I do believe that Bitcoin is going to be able to see a lot of trading happening is going to see a lot of volatility coming back in the next couple of months, and that's what we're going to talk about today. The first thing I want to talk about is the CPI, because we discussed CPI we discussed CPI when it came out over here on CPI, bls.gov/CPI at 3.2%. CPI began to rally. And so I want to back up and talk a little bit about this data and the significance that it has on the Bitcoin market. And I also want to talk about why the 0.2% hike is so very important and how all of this is going to tie into the next 6 months on Bitcoin and the next 6 months on the stock market. Because truthfully, there's a big mix-up coming on the markets. And so let's go ahead and get started with the history of the CPI. As you guys know, the CPI is the Consumer Price Index. It is put out by the Bureau of Labor Statistics every single month. It is a 12-month moving average, which means it takes the data for the consumer prices in the United States over the last 12 months, averages them out, and then it updates monthly. So it's actually a 12-month rolling moving average based on a number that continues to go up. If you look up CPI over on the consumer, let's just type it out here together. If you look up the Consumer Price Index over here, you're going to find that it's actually a number. You can see this number is where we get our percentages from. It is a 12-month percentage change, and we have seen the Consumer Price Index update ever since 1947. This is essentially the way that the United States tracks inflation, and you can see we had a massive inflationary period here in the 60s and 70s, and then it trailed off into about that target 2% following the ending of the Bretton Woods Agreement And following the United States' final transition off of the gold standard, many things happened in the late 70s that led to that. But then we saw another period of high inflation taking place after the pandemic. And many people have been wondering, is this just the new normal? Are we going to turn into a nation that has to just deal with 3 to 5% inflation rather than the target 2 that the Fed is always talking about? And the answer to that is one that is going to take time to play out. But the first thing I want you to know here is that the CPI has increased by over an order of magnitude ever since it was first charted in 1947. Here, as you can see on TradingView, of course, TradingView didn't exist back then, but it has access to charts that did exist back then. That is a 1,300% increase. Found another way, that is the United States dollar losing about 93 to 95% of its purchasing power ever since the end of the Second World War. And the reason that that's so significant is because this is a trend that brings terror to many people. Let's look at this from two sides of the same. Let's look at this from two sides of the same coin. Many people look at inflation as a good thing. Many people look at inflation as a bad thing. If you look at it a certain way, you're probably in crypto. If you look at it a different way, you're probably not in crypto. But I think as realistic analysts, we need to look at the fact that there is a coin and there are pros and cons to inflation. Yes, you heard me right, and no, please don't burn me at the stake. There are some kind of pros to inflation. They're the minor side of the coin, I would say. Let's back up. Why is there inflation? Well, whenever a nation or an economy grows, that growth is inflationary. And the reason for that is because to grow, you have to first invest in something. And when you invest in something, that takes money. To build a company, you have to first put $100 million of seed funding. You have to put $50 million of bootstrap funding. You have to actually get the thing off the ground. And so that is now money that is not available in the economy, which means that there is less circulating currency because all of that money is locked up there. And then that leads to there being this inflation because you have to actually get that company running. And so growth is one of the biggest drivers of inflation. Whenever you see growth in an economy, by the very nature of the way that investment works, it leads to some degree of inflation. That's where you're always going to see a little bit of inflation, prices kind of going up and the currency getting a little bit less valuable as a result of simply national economies growing and national economics changing. The other component, though, is, of course, the printing side of things. The United States government prints money every single year, and we can see that over on the USC BBI, United States Central Bank balance sheet, right here. You can see the chart of the amount of quantitative easing that has been done by the United States and how much money is sitting on the United States Fed's balance sheet. That has gone up dramatically over the course of the last 20 years, which has only contributed to this inflation. Now, the reason that inflation is seen as a bad thing, and I think we all kind of know this, but let's just cover our bases. The reason that inflation is seen as kind of a bad thing is because it's seen as a silent tax. It's seen as a way, and it is a way, that if you put $100,000 under your mattress in 1947 and you come back, and you pull that $100,000 out, it is all of a sudden going to be worth 93 to 95% less than it was when you put it there. So it's a silent tax. You get taxed about 2 to 5% due to inflation over the course of every single year in the last 10 years or so with the United States dollar. Of course, that's been higher ever since the pandemic. That inflation has two drivers. Number one, it has the driver of the expansion of the currency, but number two, it also has the driver of the expansion of the economy itself. Both of those things are not inherently evil. And so what I want to say here is this. It is something that inflation is something that absolutely guts an individual, and there needs to be a way that we individually can fight back against that. We can do that through investment. We can do that through holding cryptocurrency. We can do that through holding assets that have very high scarcity. But the two things that mainly drive inflation are actually economic growth, which we largely see as a good thing, and of course also the introduction of more currency into an economy. Now, there's two different reasons that you introduce currency into an economy. I'm just kind of giving you a background lesson of CPI, so we're going to talk about what the story of CPI is and how this actually, what the outflowings of this are over the course of the next 6 months or so with the current state of CPI. The two reasons that you inflate a currency are, number one, because you are trying to combat economic slowdown. You're trying to inflate the currency you're trying to stimulate the economy by inflating the currency, putting more currency out there so that investors, that being either investors in the market or investors that are trying to start new companies, have easy capital at their disposal where they can go and stimulate the economy. It's a bit like pouring gasoline on a fire that's already going. The economy's never actually been put out, but sometimes it smolders, and a quick way to get a fire going a little bit further is to throw gasoline on. I used to burn stuff as far as we used to have fires, and and there was brush and whatnot that we would burn. We'd cut down trees. I mean, I had a chainsaw. We cut down a bunch of trees around our property, and so we'd have to burn it. And sometimes the trees are fresh. They were just cut down that day, so they're very wet and they wouldn't want to burn. And so what I would do is I'd walk around the fire. We had this giant burn pit. We get these giant fires going, these brush fires. Not brush fires. These fires to burn off the tree that we just cut down because we didn't want the tree there. We wanted a field there. And so I had a little shot glass. It was literally an 1.5 ounce shot glass, and I would pour gasoline in it. I'd throw it on the fire. If it started going out in one spot, if I wanted fire there, I just poured a little shot glass of gasoline. Boom, there you go. Probably not the safest thing in the world, but that's what I did. I'm just going to be honest. And so that's a little bit what the United States does whenever they see, oh man, this sector of the economy at large, because this is really only something you can do on the economy at large. They say, oh man, the economy's not doing great. Let's just throw a shot of gasoline on it and get it going again. It's not a solution. Okay? It's not a solution. And the reason that I would do that with the gasoline is because that wasn't a solution. I also have a gasoline going to burn off in a minute. But the idea is that it would spark something that would continue to burn, and it would be the catalyst of a new reaction. And so when the United States embarks on a quantitative easing, it is basically a lazy way of getting the fires going. In the same way that the shot glass of gasoline was a lazy way of getting the fire going. And so that's one of the reasons that they inflate the currency. Now, another reason that the currency is inflated is because the economy is larger. There are more people in the world, and when there are more people, you naturally need more currency, or else you would enter into deflation, which is actually just as damaging. So there is a certain degree of you should be continuing to increase the amount of currency alongside the number of people so that there is a parity between the number of people, the size of the economy, and the amount of currency that is needed to lubricate that system. It becomes an issue when you have a crisis that shows up overnight and there was not a system in place to manage that crisis, pandemic, and then you just start dumping gasoline on the fire, hoping that something's going to work. Well, if you do that too quickly, if you don't use the shot glass, strategically, and you just open up the lid and you just start dumping gasoline on there, eventually you start a forest fire. And that's a little bit what happened over the last 3 years. We saw a huge amount of quantitative easing, and so now the United States government is trying to get that under control. And so that's where the effective federal funds rate hikes have been coming in. The effective federal funds rates are equivalent to like a fire truck coming in, trying to put that out, right? You shouldn't have had to do that because you're trying to put out a problem that you already had. A lot of people talk about John F. Kennedy, for example, with the Cuban Missile Crisis. Well, there's a lot of people that would say that John F. Kennedy's CIA with the Bay of Pigs is the reason that we actually saw the Cuban Missile Crisis in the first place. So you get the credit sometimes for putting out a fire that you caused. If you hit somebody with a car, but then you get out of the car and you drive them to the hospital, are you a hero or are you the villain? Or are you kind of both? That's what the United States government is right now. They are kind of both. They caused the problem, and now they're trying to solve the problem, and the cause and the solution are both damaging the American people. Is inflation intrinsically a terrible thing? Not necessarily. Most of it is. But to a certain degree, you have to increase the supply of the currency to maintain the ability for the economy to function. Because if we had $10 and we had to share it amongst 300 million people, I think we could all agree that that wouldn't work very well. You do need more currency for more people, right? I think we can agree on the logic of that. But when you do it too quickly, you end up causing huge amounts of inflation. And when you use the gasoline to keep the fire going and get it going the way that you want it to, rather than fixing the core problems, then you run into the situation that we're in right now, where we're seeing a rebounding inflation. We see 3% inflation reported last month. Now we're seeing 3.2%, and I'm here to tell you that this is more than likely only the beginning. I'm not saying we're going to go to 10%. I'm not saying we're going back to 9.8%, but we're probably not going to go back below 3% for a time, and that will likely lead to more hawkishness from the Fed, although I think the Fed anticipated this, so it may already be priced in, if you will, over there. The reason that inflation is likely going to continue above 3.2% is because core inflation is much more sticky at 4.7%. Core inflation has come down by about 1.1% over the last year. It was sitting around 5.8% about a year ago. It's only at 4.7%. In the same time, all items has dropped by almost 6% in that same time, in the time that all items has dropped by 1.1%. This is the real number that we should be paying attention to. Most people want to talk about 3.2%. 4.7% is the number that really matters. And the reason is because of energy. Food is right there next to all items less food and energy. There's an issue with energy. And to explain that, we've got to do a little bit of geopolitical analysis as well. We'll talk about how this all ties into crypto here in just a moment. But it's important for us to understand what's going on in the broader markets. Now, the energy markets. The reason that this number, all items, is at 3.2% is because energy has dropped so dramatically. It's sitting negative 12.5%. That's going to end soon. There has been a revolution in United States fracking and shale oil production. The amount of oil being produced in the United States is at a record high, and the dream of energy independence has more or less been achieved, especially ever since the Russians invaded the Ukrainians. Now, part of the reason for that is because when Russia invaded Ukraine, they began a blockade against the port of Odessa. You've probably heard about this, grain shipments trying to get out to Odessa. Ukraine makes up 12 to 13% of all of the wheat imports for Egypt, for example, which is one of their staple crops. They need that to feed their tens of millions of mouths. Very fast-growing civilization. And so the Russians embargoed the port of Odessa and the other ports in the south of Ukraine. I can just show you a map really quickly here. They embargoed, and again, this all ties into crypto, so just bear with me. The Russians, when they invaded the Ukrainians, embargoed the port of Odessa and all of the other ports here in the Black Sea. Of course, we saw Russia invaded. They blew up the Novokakhovka Dam here on the Dnipro River, flooding all of this. And they've had the port of Odessa embargoed for quite some time. There are other ports that Ukraine has down here on the it's not coming to me. What am I trying to say? The Danube River. Those have been embargoed also. More or less, if you're Ukraine and you're trying to send shipments out here, there was a grain deal where the Russians would let it happen, but they would inspect you for guns and ammo and people on the way out and on the way in. Well, that has fallen apart, and at the same time, the Ukrainians have come up with these little boats that they load with a crap load of explosives, and they shoot the thing. They send the thing straight in the direction of the naval ports at Sevastopol and Novorossiysk. And again, let's talk about this. Is all going to apply to economics because this is a big change that's coming very soon. They've been launching these little motorboats at Sevastopol, the Kerch Strait Bridge, and Novorossiysk. Sevastopol is a naval base, a deepwater naval base in the Black Sea that the Black Sea Fleet had been stationed at for quite some time. They had previously been stationed at the port of Novorossiysk. You can see right here. If you go onto Google Maps, you will see the berths right here. This is where the Black Sea Fleet was stationed. They moved them to the forward position of Sevastopol during after the 2014 annexation of Crimea, right in here. You can see the berths right here. The Ukrainians managed to push out all of the military vessels out of Sevastopol, blow up the Kerch Strait Bridge, and now they're able to reach all the way to Novorossiysk. There's essentially become a shooting war in the Black Sea, and Ukraine has said that anybody coming in or out of Russia is going to be a target, and Russia has said that anybody coming out of Ukraine is going to be a target. Why is this important? Well, this territory of Russia brings through millions of barrels of oil every single day. You might be seeing how this is going to apply to cryptocurrency now. The Russians have been exporting this oil out to global markets, especially to their own military holdings and also to other consumers, such as going through the Suez Canal all the way over to China, who's been a major buyer of Russian oil. And yes, believe it or not, it is easier to get oil to China sometimes from coming through the Black Sea around the Suez rather than sending a pipeline through Mongolia, because you're in the middle of nowhere and there's like one mountain goat and one dude with a cool hat. That's all that lives out there. And so when the Ukrainians said, hey, we have these boats, we're going to blow up anything coming out of Russia, now nobody wants to do business with Russia, buying their oil and taking it on a freighter anywhere else, because good luck getting an insurance policy on a boat when you were told that if you sail into this area, you're going to be exploded. And so the reason that's an issue is because Russia has been one of the largest exporters of oil onto the global markets for over a century. And they just lost the ability to ensure safe passage to anybody trying to buy oil from them on the global markets, which means that the United States and Canada are going to step in to fill the mix. You see, Russia has a certain blend of oil, and so does Kazakhstan, who also exports through here, have a certain blend of oil that Canada and the United States are able to produce as well. And so Canada and the United States are going to step in more than likely and fill that gap. They've already been filling the gap of Russian oil. And so now they're going to do that even more, which is going to lead to another explosion on U.S. oil, domestic oil production in Canada and the United States. That's going to do two things. Number one, it's probably going to keep gas prices low, probably around $4, probably even lower than that. And it's going to lead to even more industrial build out over the next 12 to 36 months, which, as we learned earlier, is inflationary. Both of those facets are going to lead to energy category probably flatlining at 0%, which means it's no longer going to bring down this 3.2% from 4.7, and it's going to allow inflation to go up. But again, on the other hand, everything in the United States economy is being tooled towards the largest industrial build out that we have seen probably since the creation of the interstate highway system, maybe even since the Roaring 20s. And the post-World War climate where we saw a massive amount of industrialization. This is one of the largest industrial build-outs in the history of the United States, and that is going to lead to inflation. Inflation is not going below 3% this year. Let me just say that. Let's just put that out there. It's very unlikely that inflation goes below and stays below 3% this year. It's more than likely going to go higher. So, how does that tie into Bitcoin? Now you're seeing where this is all going to come in. CPI is going to remain sticky throughout the year and is probably going to remain sticky because of the black sticky stuff, the oil, for quite some time. And also because of the amount of industry that's moving from China into southwestern United States, but that's a different topic. With that occurring, how does that apply to Bitcoin? How does that impact Bitcoin? Let's talk about that. Well, high inflation, oftentimes, especially if inflation is moving up, scares people. Most people don't understand what's going on geopolitically. Most people don't understand what's going on with domestic industrial build-out. Most people just see inflation go up, economy do bad. It's not that simple. The main reason inflation is probably going to go up at this point is not because of quantitative easing, because we know that stopped. Quantitative tightening began a year ago. Instead, the reason that inflation is going up is because the United States is in the middle of one of the greatest golden parachutes that it has ever received industrially and economically. China is blowing up on itself, and nobody wants to do business with them. They're turning into the largest surveillance state on the planet. They have been for a very long time, but they're continuing that. Russia invaded Ukraine, brought much of that production offline, which means the United States has an opportunity to fill the gap of the dearth of Russian food or an oil outputs and the dearth of food and ore outputs out of Ukraine as well, which means there's a lot of industrial build out going on there, because as these different nations start to fracture and have their own internal and domestic regional issues and wars and conflicts, the United States is stepping in to increase its global share of gross domestic product by building out its industry. That's very inflationary. And again, to the average person, they're going to see that and they're going to say, I don't know. I don't like that. I do not like that there's inflation. I don't want to lose value in my dollar every single year, even if the reason that that's happening is largely because of the growth of the economy. Rapid growth of the economy. That's going to lead to two things. Number one, it's going to lead to growth on the stock market for two reasons. Number one, the stock market, tracks the United States' economy. It tracks the growth of industry. And so if industry is growing, the SPY is going to go up. You're going to see the SPY hitting crazy all-time highs. I'm talking it's probably going to be 10% higher than all-time high within 18 months. The stock market, and that's one of the reasons we're putting investments in the stock market right now. The stock market is going to breach all-time high unless some kind of black swan event happens. Unless we have some kind of debt bubble pop. Which, by the way, just don't be involved in the bubble, and then you can benefit from it. Just don't be involved in the debt bubble. Get rid of your debt as quickly as you possibly can. If a crash happens, boom, you got money on the sidelines. Take advantage of it. A crash is not an inherently bad thing, so long as you're not in debt. 2008 was the greatest money-making opportunity in a century if you did not have a mortgage. Let me just say it again. 2008 was the greatest money-making opportunity in the last 100 years if you didn't have a mortgage and you had money on the sidelines because you had been saving and investing money and putting aside investment capital for the 30 years prior to that. I'm not saying it was a good thing. It wrecked a lot of people, including ourselves. Messed us up financially. But if you were able to be in the position to take advantage of it, which is a big if, but I'm going to help you get there, it would have been an opportunity. But I don't think that's what's going to happen. I think the United States economy is going to continue to roar, and I think you're going to see that industrial build-out lead to a break above all-time high on the stock market, and then it's going to absolutely moonshot. That's what you see happen whenever the stock market hits a new all-time high. It just absolutely explodes. And I think based on the geopolitical realities, we're going to see the exact same thing happen this time. Secondly, though, with high inflation, that is also going to lead to people wanting a place to put, one, those gains from the stock market, and two, just the rest of their money in to protect it. And where are they going to go? They're going to go straight to Bitcoin. They're going to go and put money into Bitcoin when they see inflation sitting at 3.5, 3.6, 3.7% because they want to counteract that. At the same time that BlackRock and Larry Fink are trying to build a Bitcoin ETF, and everybody thinks that he's, the right-hand man of the devil, but the fact of the matter is he's one of the most powerful people on the planet, and BlackRock putting putting a Bitcoin ETF out there would drive insane amounts of retail adoption. The high inflation is going to lead to interest in Bitcoin because it's seen as disinflationary, and at the same time, Bitcoin is positively correlated to the stock market. With Bitcoin being positively correlated to the stock market and this entire mess causing a rally on the stock market, and with Bitcoin being a hedge against inflation and the rally on the stock market being driven by inflation as a result of geopolitical and fundamental realities, you're going to see a rally on both. And that's where I think the next 6 to 12 months are going to be very bullish on Bitcoin from a fundamental background. But we can also talk about the technical background. But first, let me just take a second and read some chat. Really appreciate all of you guys for tuning in. Okay. What do you think about the U.S.'s credit rating going down? I think that credit ratings in the first place are kind of a joke. And to be honest with you, it should have happened a long time ago. I don't understand how anybody has any business having a AAA credit rating when they're $31 trillion in debt. Think about that. Think about that for a second, Freedom Advocate. $31 trillion in debt. Let's wind the clock back here. We love coming here. USDebtClock.org. Sorry, 31.5 was the most recent number that I saw. It's 32.5 now. Sorry, I missed $1 trillion worth of debt there. Maybe I had too much faith in the United States government. Let's just back up for a second. Doesn't the United States government act like the average American? Isn't it so funny that our government acts like us? Isn't it just remarkable that we the people elect officials that act like we the people? How about instead of complaining about the United States government's debt, how about we get out of debt ourselves? And then not elect somebody who's going to advocate for it. If you can't afford it, don't buy it. It is that simple. The United States government and the majority of the United States people don't want to understand that. If you can't afford it, don't buy it. Look, there's a principle. I'll just say this really briefly because I want to answer this question. It's a great question. There are two ways that you can buy something. You can either borrow from the future or you can borrow from the past. You can say, I've spent the last 10 years saving up this money, and now I'm going to buy this. Or you say, I'm going to spend the next 10 years earning this money, but I'm going to buy it now. You can buy something before you make the money and use debt, or you can buy something after you made the money and use common sense. You see, we have some relatives. Excuse me, I'm still getting over a cold. And he's a watch repairman, a clock and watch repairman. Insanely talented. This dude, I'm just talking ridiculously talented. If you don't know anything about watch repair, it's a very exclusive industry. You can make, there are people that make $2,000 in profit every single day repairing watches. They are that good. It's ridiculous. They can make hundreds and hundreds and hundreds of thousands of dollars a year in profit. Several of my wife's family members work in the watch repair industry because her grandfather did. He had a clock shop, and so most of them picked up those skills. All three of the ones that we're closest with work very heavily with clocks and watches. And you can make a ridiculous amount of money. But what they did, he worked as a watch repairman and a clock repairman for 10 years, saved up his money, bought his house in cash. And so when he went and started his own clock repair business, he had saved up all this money and he didn't take any loans. He had life savings on this, and he had a house. And it became a giant issue because the watch repair and clock repair industries with Rolex, all the different major companies, they're very exclusive, and you have to get parts accounts. You have to get basically a decree from on high that, okay, you can repair watches now. You have authority from this company that you can repair our watches, right? And so it took him a very long time to get those accounts, and so he was running off of savings. But it wasn't. It obviously was kind of stressful because they didn't have much of an income at that time. But it wasn't stressful to the point where they were going to lose their house. It wasn't stressful to the point where they were going to lose a car. They had 2 paid off cars and a paid off house. They didn't have to worry about it. They weren't sitting here. He wasn't sitting here trying to build this business, which was very risky because he was basically hoping on the good graces of this one guy that did not want to play correctly, that he would give him this account. But it wasn't as stressful as it could have been. It was still stressful. It wasn't as stressful as it could have been because he wasn't thinking at the back of his mind, I've got 3 months to get this right or I lose my house. He wasn't thinking that because he wasn't running things on debt. Then you get to the United States government. Now, look, I'm not here to say that debt is absolutely evil. I am here to say that it's not called a good thing anywhere in the Bible. It's not called a good tool anywhere in the Bible. And I'm not going to sit here and say that I've never used it, but I don't like it. And it's our goal to get as far away from it as possible. And so when the United States is $32.7 trillion in debt, and that is, goodness gracious, what, a time and a half GDP, 10 times federal revenue? What is the federal revenue? I think it says it right here. The tax revenue is $4.6 trillion. So this is 8 years of revenue. This is like if you had $100,000 a year income. Like you've seen these clips over on Dave Ramsey. I make $100,000 a year and I'm $800,000 in debt. And you know what Dave Ramsey or whoever's on the show does? What are you doing? That's D-U-M-B dumb, right? That's kind of the deal. Sorry, neighbors. You know, but that's the deal. It's stupid. Why would somebody that has $800,000 in debt and $100,000 a year income and no plan to pay it off, by the way, and they've been racking it up for the last 70 years, have a AAA credit rating? Maybe a long-winded answer, but Freedom Advocate, it should have been dropped a long time ago. It is absolutely absurd that the United States has anything other than an F- on their credit rating. It's ridiculous. It's absolutely ridiculous. All right. So, great question. Great question. All right. So, continuing on here. Bitcoin, over the next 6 to 12 months, as a result of fundamental realities, is likely to have a rally. I believe that in the next 6 to 12 months, Bitcoin will be trading at $40,000. But there's a technical story here as well. If you look on the daily chart, we have, over just the last 3 days, had a bullish MACD cross. The last time we saw that happen was here. The charts tell a story, and I want to tell it to you. The last several times that Bitcoin has had a bullish MACD cross have been very bullish. Duh. It's kind of the way that works. These are all the previous bullish MACD crosses. You can see whenever one occurs, Bitcoin rallies invariably. Now, if we come here and we take out two of the least valuable MACD crosses, if you will. Let's take out the MACD crosses that happened above the zero line and the MACD crosses that did not lead Bitcoin above the zero line. So these are like the real serious MACD crosses, right? We're kind of ignoring these little blip in the radar nonsense MACD crosses. We're looking at the real strong ones that started below the zero level. So Bitcoin was already low enough that it was a good place to invest and then rallied high enough that it was a proper rally. That's what Bitcoin's doing right now. Cross bullish below the zero line, moving up. That is very significant because that is what happened at the beginning of every one of these previous rallies. By the way, the same thing happened. I can almost use the exact same lines here with the RSI crossing above the 14 interval moving average, below the 50 center line, and then moving above the 50 center line, moving all the way up above 70, which is overbought. We saw it happen here. We saw it happen here. Again, I'm using the same line. I'm not even moving these from when the MACD happened because they happen in convergence. If we look right now, we're seeing the same things occurring. Bitcoin's breaking above the 14 interval moving average, breaking above the 50 level, and so long as we can stay up here and put it in a proper uptrend, then we're going to be in good shape. The MACD and the RSI on the daily chart indicate to us that we're getting closer, might not be there yet, but we're getting closer to a larger rally. And this is what the institutions are looking at. Make no mistake, a lot of what's going on in Bitcoin right now are driven by large-scale institutions, and they know exactly what they're doing. They're watching these larger patterns, and they're placing trades on them. What I believe that the majority of the market is looking at right now is whether or not Bitcoin's going to hold 28,545 in this uptrending level of support, and if so, then Bitcoin's going to bounce and rally above 31K in the next 30 days. You heard that right. I think in the next 30 days, Bitcoin will be above $31,000 if we hold this uptrending level of support in 28.5 and we manage to get some momentum off of it. However, the reason that we haven't had that rally yet is because there is the very real possibility that Bitcoin falls below 28,545, below this uptrending level of support, and falls back down to support somewhere above 25,236. I doubt we'd fall as far as that. I certainly doubt we'd fall below it. But it's possible that we fall below the uptrend and below 28,545. So we're in a holding pattern. Is anything going to happen over the weekend? Probably not. Just going to be honest with you, it's probably going to be a boring couple of weeks. But The boring couple of weeks are the weeks that you actually need to be paying the most attention to. Because if you start paying attention to this rally on this day, because it happened, and then you're like, oh man, 2 days later I noticed it, it's already over. The next 2 weeks, I say, are going to be boring because there's no price action, but they're going to be tense because we know that it's more than likely coming. Bitcoin cannot range sideways here forever because eventually it's going to run straight into this uptrending level of support, and it's going to be forced to either bounce off of it or correct off of it. However it happens, Bitcoin is either going to go through a major rally here, or it's going to fall below and it's going to bounce and it's going to rally somewhere here. The first option leaves Bitcoin with a rally above 31K in the next 30 days. Or at least moving up towards 31K in the next 30 days. The second option leaves it happening probably September or October. Either way, the realities of what's going on globally and the realities of what's going on with the stock market and how all of that ties into Bitcoin are unequivocally true, and they're absolutely correlated. If we look at the SPY compared to the Bitcoin market, we can see a huge, overwhelming long-term correlation. Massive long-term correlation with the stock market and Bitcoin. When Bitcoin is in a bear market, it is normally happening right around the time that the stock market hits a bear market as well. When we had the pandemic drop, Bitcoin dropped as well. When we had the drop here in 2019, the market dropped. When we had the drop here in 2018, the market dropped. We're looking at correlations going all the way back over half a decade. The entire time I've been in crypto. I've been in crypto over 6 years now, guys. I've watched this happen over and over and over again. As the stock market breaches all-time high and goes back into a bull market, you're going to see Bitcoin more than likely doing the same. And the good news for you in Bitcoin is that you're positioned to make even more money than you would in the stock market. I do encourage investment in the stock market, although I do encourage diversification outside of the stock market as well. If you can get into real estate and you have the cash flow to do that, you got a paid-off house, and you've got the money to buy an investment property with at least 50% down, please don't try and get a real estate rental property with 20% down and hope that the renter is going to make your mortgage payments. You are setting yourself up for failure because an AC unit's going to go out and you're going to be up a creek 10 grand and you're going to have to kick that guy out because you're going to have to foreclose on the place, put at least 50% down, ideally buy the thing in cash. And if you have to start with a $40,000 beater and put some work into it and learn how to swing a hammer and fix the thing up and put some more property value into it so you can charge more rent, then do it. It's a good way to learn what you're doing. But I do encourage being diversified outside of the real estate, outside of the stock market. But I also do encourage being diversified outside of the real estate market and outside of the cryptocurrency market. I think that there is value in all three. And I think that to neglect one is to neglect your overall position. It's a wise move to have money in Bitcoin. It's a wise move to have money in the stock market. It's a wise move to have money in real estate. Why? Because for as long as they've been around, they have proven to be profitable. There's a proven process. You buy land, you put something on it, you rent it to somebody, and you make money. You buy stocks, you hold it for 10 years, you make money. You buy Bitcoin, you hold it for 10 years, you make money. It's been around for 10 years. That's long enough for me to start taking it very seriously. Bitcoin's been around almost 14. Ethereum's getting pretty close to that 10-year mark. And it's got a very long-term trend that I can track and say, hey, there's money here. This is an investor's dream. People are starting to realize that on Bitcoin. The next 3 years are going to be transformative as people realize this thing's been here for 15 years and keeps making money, especially after it hits $65,000. The moment that Bitcoin hits all-time high and breaks it is the moment Bitcoin becomes mainstream. And I think that's happening next cycle. You see, Bitcoin is going to go into a rally when the stock market does. And the stock market will probably be breaking all-time high within at most the next 6 months. Maybe sooner. The stock market could drop all the way down to 430, and then it could rally all the way up to 480. And I think it will. This is a great time to be alive if you're an investor. If you've got money on the sideline, now is a great time to be alive for you. There's so many opportunities in stocks, in crypto, and while there's not that many great opportunities in real estate right now, when rates start coming down and property values crash, because as soon as rates start coming down, property values probably will crash, just so you know. Because everybody who's been stuck in a house because they don't want to go and get an 8% interest rate is now going to want to move, because they've been waiting for 3 years. When that crash happens, then there's going to be money to be made there as well. So if you're able to get your personal finances under control, save up some money, put it into the market, you're going to be able to make generational wealth. If you do things correctly, if you manage your personal finances correctly, if you were wise, if you were diversified, and if you capitalize on these movements that are going to take place over the next 6 to 12 months, in the stock market and in crypto, you're going to make a lot of money. And probably about a year to 3 years from now, there's going to be a great opportunity in the housing market. I'm not saying we're going to go through an 08 style crash, but I am saying you're going to have a pullback more than likely, probably 5 to 10, 15% nationally. And you'll also have very low rates. So if you are using a mortgage, you'll be able to get a very good monthly payment. So you'll be able to profit on that. Ideally, don't even worry about the interest rates and just get a house in cash. But I understand that's pretty hard for some people. Pretty hard for most people, not some people. Pretty hard for most people. So yeah, there's great opportunity coming. And if you know how to capitalize on it, you will be glad you did. Larry Fink used to laugh at crypto. Now he's embracing it. Enough said. If that's not an indicator of the future, I don't know what is. Yep, that's a pretty big one. It's a very, very big one. MS said, I love this channel, and as a German, I am pretty good in English. Good for you. I would not have guessed that your first language is not English. But no offense, Jeb. I have to set you to audio 0.75x speed to understand all of what you speak. I'm sorry, MS. I know I speak very quickly. But what I will say is that a lot of people really appreciate that. Because they're able to, get more information quicker. But hopefully that helps. Tell me, MS, if it helps that you're able to set it to 0.75. If not, if that's difficult, that's something I should consider. But so long as you are able to understand some way, then I hope that's helpful. Reppin the 914 said, "Lol, stick to crypto. Most people aren't throwing 50% down payment. Why?" Look. Reppin the 914. I'm not sure what your 914 is, but let me just. Why are most people not throwing a down payment? There's two reasons. A 50% down payment. There's two reasons. One, because we're living on future income rather than living on past income. Or two, because we're buying too big of a house. Right? We got to get a start somewhere. You got to get started. There's this idea that we have to live the American dream very young because it's fleeting and it's gone away. The American dream is a lot more difficult for people. The American dream is a lot more difficult for people because we're trying to live the American dream too big, too quick. The American dream is there. You realize there's a statistic that I think is relevant here. I think it's like I need to look this up and get the exact number, but you can fact check me on this. I think the number is if you immigrate legally to the United States, you are 4 to 5 times more likely to become a millionaire than a homegrown American. Because a lot of times people coming to this country from elsewhere see the entrepreneurial potential in this nation. And they realize what they can do. And so they grind and they grind and they grind now. And they build wealth and they do it in 10 years. They do it in 20 years. And they have patience. They do things sustainably. They invest in the idea of compound interest. And let me just tell you something. A rental property pays a lot more money if you don't have a mortgage on it. If you don't have a payment on it. So yeah, most people aren't throwing around a 50% down payment. There's two ways that you can get there. Number one, save money for longer by living on dirt. The whole college student life, people say that's broke. That ain't broke. You know what's broke? Being a serf in 1400s England and you eat dirt. Like that's living broke, right? Not saying you can live on very, 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 very little healthily. By the way, most people are like, oh, there's no way that you're going to be able to live on a little bit without eating out of a box. You eat whole foods and you cook them and you don't eat, pizza rolls every single night. You'll actually end up making more money. Anyway, let's see. Where can I buy S&P 500 stock? I would recommend Fidelity as a brokerage. They've got 42 million people signed up for them. There's over, almost $9 trillion of assets under management. That's where I use. That's the brokerage account that I have, my Roth IRA and brokerage account and everything in. If you don't know what to do, it's not a bad idea just to buy the market, but there's also other large growth funds and stocks that you can do that Fidelity creates. Vanguard's another one. I prefer Fidelity because Fidelity actually has some access to cryptocurrency, also has some access to charting, is more user-friendly, more tuned to more technological, what am I trying to say here? There's more technology in it to help you figure out what you should buy, basically. So Fidelity, Vanguard, those are the two big brokerages that everybody talks about. There's other places you can buy it, public.com, Robinhood, that I would recommend getting a brokerage account, starting with a Roth IRA. If you got a 401k, then open the 401k, get as much match as you can, and then use a Roth IRA. All right. I hope you guys have enjoyed today's show. I really appreciate all of you guys for tuning in. I haven't been using my Bitcoin profits to start paying with cash. It's completely halted my credit card use. Good. Yeah, this is something I've been struggling with for years. I've used debt to get where I am, but I'm constantly battling it. It's not fun, is it? Debt is not a fun thing. Not a fun thing at all. You know, like I said, if you're using debt for something, it means that you are buying something with the hope of future profits rather than profits that you made in the past. It's basically betting on the future rather than profiting from the past. And then another way that I like to think about debt is that what happens if you lost your entire income? What would you lose? Right? If you have $800,000 in debt and $500,000 in assets and you have a negative $300,000 net worth, then that means that you would not only lose everything you have, you would also still owe $300,000. And the Bible talks about a righteous person paying the debts that he is owed. If you have, a mortgage, you got $300,000 mortgage, $400,000 home, you lose your income, you have to sell the house, you're left with, after closing costs, 70 grand. It's not great, but you could use that to rent somewhere for 3 years. It's better than nothing. I'm not saying I'm a giant advocate for debt, but I am an advocate for being in a sustainable way, getting rid of it over time. Because it is better to be in that position that, one of my wife's family members is, my family member is, where he was able to go and start a business and he wasn't worried about having a roof over his head for his 4 kids because the roof was paid for in cash. He could have gone out there and put the 2 lions out front at the end of the driveway kind of deal, He didn't, but he could have, Anyway, I hope you guys have enjoyed today's video. I really appreciate you guys for staying tuned. If you've not already, make sure to go on over to Club DeFi and check out Club DeFi's Principles of Technical Analysis. I want you guys to become experts in cryptocurrency. And the way that I can help you do that is by teaching you technical analysis, and that's what Principles of Technical Analysis is going to do. If you come over to bitcoinacademy.teachable.com, you can go to Club DeFi over in Google, then you will find Principles of Technical Analysis here, and this is the place where I'm going to teach you everything that you need to know about technical analysis. If you scroll down here, you can see that there are over 60 videos teaching you all of the patterns, everything that you need to know to really hit the ground running in technical analysis, and I believe that you're going to do an exceptionally good job of being able to profit in these markets. I want you to be able to read the story that the market is telling, because make no mistake, every single day the market is telling a story, and the technicals are the way that you translate it. We are translators. We translate from technical analysis into English. And by understanding what the market is trying to tell you, you will have the ability to go and profit in that market. So I highly encourage you to check out Club DeFi's Principles of Technical Analysis. You can find that using the link in the description box down below. Thank you guys so very much for tuning in. I am going to go ahead and wrap it out. Before I do, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.